On June 12th, SpaceX is expected to go public, and depending on where it's priced, this could be one of the single largest IPOs in market history. And we're talking about a valuation around $1.75 trillion. Now here's the part that almost no one is talking about. There's already an ETF that holds nearly $292 million in SpaceX, about 14% of its entire portfolio. And this is before the stock even trades. A few years ago, getting a piece of SpaceX as a regular investor was basically impossible, and today you can get exposure through a ticker that trades like any other ETF. Let me show you how this exactly works. The fund is XOVR, and this is the ERShares Private-Public Crossover ETF, and it trades on the NASDAQ. It is actively managed and is a little different from your typical large cap fund. Now here's the quick rundown. As of early June, it is sitting around $2.2 billion in assets under management. And that number is pretty wild when you look at where it came from. Back at the end of March, this fund was around $400 million in AUM. So it has grown, but more than 5 times over in about 2 months. Now it holds 33 names in total, with information technology as its biggest sector at around 26%. And this fund used to trade under the ticker ENTR. Now back in August of 2024, ERShares restructured and converted it into XOVR and added what they called a private sleeve. And that is the whole point of this ETF. XOVR was the first to put private equity exposure inside an ETF wrapper, and since then, others had started following the same playbook. So right now, the private side holds 2 names, SpaceX and Anduril, the defense tech company. And because it is an ETF, you get the stuff you would expect exactly from a normal ETF, which is the daily liquidity, the daily NAV, and you get to buy it through a normal brokerage account. And that is actually a bigger deal than it sounds. So let me back it up for a second. Before something like XOVR existed, if you were a regular investor who wanted a piece of a pre-IPO company like SpaceX, your options were very rough. You had close-end funds, which often traded at a premium, meaning you would pay more than the stuff inside was actually worth. You also had interval funds, which would lock up your money and only let you pull it out during specific windows, or you bought shares on a secondary market directly, which required you to be an accredited investor with minimums most people cannot hit. XOVR basically takes all 3 of those headaches and deletes them. And this ETF trades on the NASDAQ stock exchange during market hours at real market set prices. So there's no accreditation, there's no lockups, and it discloses its holdings daily, so you can actually see what this fund owns. Now for years, the gap between what big institutions could get into and what you and I could get into in private markets was enormous. But now that gap is a whole lot smaller. Okay, now is the part most people get wrong, so stick with me here. XOVR does not own SpaceX shares directly. This exposure runs through something called an SPV, which is a special purpose vehicle. Essentially, think of it as a separate legal entity that holds economic interest in SpaceX. The fund owns a percentage of that SPV, and that is what gives shareholders their indirect exposure. Now here is where it gets interesting on fees. So that SPV is structured as what is called 0-0, which means 0 management fees and 0 performance fees at the SPV level. Now the management fee on the fund itself is 75 basis points or 0.75% with a one-time private acquisition fee on top. But there's no extra layer of private equity fees stacked on top of that ETF. And that matters because in private markets, the classic setup is a 2 and 20, which means 2% a year plus 20% of the profits. So a 0-0 is generally unusual. The trickier question is how you price something that does not trade yet publicly. Now the fund values that SpaceX position using a composite proxy of recent secondary market transactions in similar 0-0 SpaceX SPVs. Basically what comparable stakes actually are changing hands for. And the numbers are huge. So total SpaceX exposure in XOVR is around $292 million. The manager recently added about $35 million more of SpaceX exposure. And over the past 30 days, their position has appreciated by roughly $50 million. And that gain flows straight to the shareholders. And all this is ahead of an IPO that can value this company at nearly $2 billion. So what actually changes on June 12th? So right now that SpaceX position is priced through the fair value method I just walked through. Now the moment SpaceX starts trading on the public exchange, that will flip. The position goes from a fair value mark to a live market price, and the fund's daily NAV starts moving in step with the actual market quotes instead of estimates. So here is what that means for you as a shareholder. That slice of the fund gets a lot more transparent because now you are watching the real ticker move in a live manner. but it also gets a lot more volatile. So the moves get bigger and they can go both ways. They can go up or they can go down. And the whole fund's NAV becomes way more reactive to SpaceX headlines than before. Now, SpaceX valuation has been climbing very steadily so far, but once it trades in the public markets, those steps can turn into much bigger swings. And that's just a reminder for you, the investor, to know before this SpaceX actually goes public. Now, SpaceX is the headline, but it's not the whole story. So the public side of XOVR is anchored by the Entrepreneur 30 Total Return Index, or ER30TR. And it has got a 21-year track record. It is built on what they call the entrepreneur factor methodology, which is basically a venture capital lens applied to public companies. This index screens for founder-led businesses with category-defining potential. And the track record is honestly the strongest part of the pitch. So from June 2005 through March of this year, that index has returned about 1,796%. For context, the S&P 500 did about 714% over that same stretch. The Russell 1000 growth performed around 1,017%, and the NASDAQ 100 around 1,754%. That is roughly 15.2% a year ahead of every major US index it stacks up against. And just to be clear, that's the index's performance, and the index itself is not something you can buy directly. But this portfolio rebalances every quarter, with turnover usually in the 15 to 20% range. So it is disciplined and not reactive. And the methodology has a real history of catching winners early. ERShares invested in Nvidia and Amazon back in 2005 through their early funds following the index. They also added Google, Tesla, and Meta as those shares became public. And here's the thing that gives me some confidence in this machinery. XOVR has already pulled off a private to public transition once before. Once again, XOVR was the first US listed ETF to take a private holding all the way through to a public one inside the same fund. And I want to be clear why that matters. It is all about the plumbing and the mechanics behind managing that ETF. Moving a position from fair value pricing to live market pricing inside a registered ETF is an extremely complicated process, and they have already done it once before. So the infrastructure is in place for when SpaceX makes the public jump. And that other piece is flexibility. So after the IPO and subject to the standard lockup period, the manager can hold, trim, or exit based on conviction. They're not boxed into a fixed schedule. So where does something like this actually fit in someone's portfolio? The way that I would frame it is that XOVR works best as a supplement to a core growth allocation. It is benchmarked against the US large cap growth, and that 21-year index history puts it in a different category than a one-off thematic bet. And here's a part that I find very interesting. Now, most large cap growth index funds are heavily concentrated into the Mag 7. So if you already own a broad market fund like VOO, VTI, or a CHG, you are basically doubling down on the same handful of mega cap names. XOVR is built around entrepreneur-led companies, and it adds the private market crossover exposure those index literally cannot hold. So being paired with a Mag 7 heavy core allocation, it actually spreads out where your growth is coming from instead of piling it onto the same names. And on cost, a 75 basis point fee is at the low end for anything offering private equity exposure. And if we stack it up once again against mutual funds, interval funds, or closed-end funds in that category, there are no private equity fees layered on top. So here's where it all lands. June 12th is going to be a defining moment both for SpaceX and the people holding XOVR going into it. The fund has already delivered around $50 million in SpaceX-driven gains in the last month, and the second that the stock opens for trading, the positions flip from private fair value to the public pricing. So for everyday investors looking at this IPO and wondering how to actually participate, XOVR is an answer that already exists, it already trades, and already holds the position. If you found this breakdown useful, hit subscribe. I break down an ETF like this every single week. I also have a full written deep dive on XOVR in my newsletter. Link is in the description, along with the fund page if you want to dive deeper into the prospectus and details of this fund. Drop me a comment, which ETF should I break down next? And as always, thank you for watching.